Hi everyone, this is Ted Wood speaking here with Mark Towery. Mark is an interesting investor, interesting thing. He's already got 2 deals done, and we're going to have him discuss a little bit, not just about those specific deals. We'll show you a few pictures of that, of what he's done so far, but to get an idea, Mark's a man who's got a handle on where he's trying to go and how he's trying to get there. So we'd all like to probably gain a lot if we just let him visit with us a little bit about his plans for the future and what he's been doing. So what I'll do first, Mark, is go to the, this is, I guess, the Ohio lease agreement here for 1011. And is that, how do you pronounce that street?
It's Blakely Drive.
Blakely Drive. So tell me a little bit about that one, what got you into that, and then what getting you into some of these other things that you're looking at right now, and what you expect you'll be able to accomplish with this particular property.
Well, I attended the Response Deal Lab back in mid-November, and as we were going through those courses, the market came up, and one of the instructors was talking about how the Cincinnati area was really a great area right now to invest in. And so among other places that I started researching Cincinnati as well as Dayton, Ohio, and found some really interesting data around median price, the percentage of properties that were being rented, the population increasing. And so all of the market data kind of supported what I'd heard from the deal lab. And as I continued to research properties, I found lots of opportunity for an investor to get a property at a really reasonable deal where the rent rates were really high, and so the cap rates were really high as well. In the case of this property, it already had a tenant in it. The lease agreement runs through the end of August. It rents for $775, and the total investment for me, including closing costs, was about $60,500. When you do the math on it, you come up with a cap rate on the low end of around 12%, and this is in a B-plus class neighborhood. So this isn't C-class property. This is borderline A. So it's a good neighborhood. If you look at the pictures of the property, you'll see it's a really good property, fully rehabbed. And I had an inspection done before I signed the agreement. The inspection came back, really clean with just a few things that needed to be fixed. So I'm really happy with that one. It's turnkey. It's really just, and it's got great property management. The property management group has combined 150 years of real estate experience. They manage over 400 properties. So they really have the expertise to do a good job on this, and I felt really good once I read the service level agreement on what they would be doing.
That's awesome. And that is really the secret. A lot of people don't understand that. They just get caught up in the numbers, and they think, oh my gosh, this thing's going to have a really high cap rate or what. Yeah, that's very true if you have someone to manage it so you can keep a tenant in there that's paying you and that's not ripping the place apart. It'll make money, and that's really the secret. It's very interesting that you were able to find a B-plus market. Generally, when people are doing 10-plus caps, they're in, well, maybe you don't have to carry an AK-47 to collect your rent, but something close to that anyway. You've got into a B-plus neighborhood. How did you arrange that? This is in Dayton, Ohio, and Dayton, what does it have going for it that enables you to do that?
Well, Dayton's got a large influx of people due to new jobs coming in, and so various companies have either expanded their operations or new companies have come in, and when you look at Dayton as a whole, it's a population of around 801,000 residents. There's about a little over 57,000 total housing units, but 62.7% of the properties are single-family homes. And another interesting fact about Dayton, 56.7% are renters. combination of things. Part of it is the generation. The millennials who are coming in, they prefer to rent more than just buy a property right now. They don't want to be locked into any one area. They like that freedom to be able to move. So being that Dayton has job opportunities, you're seeing a lot of people coming in, but you're also seeing the younger generation, and they tend to want to rent. But that's a very high percentage. 56.7% of Dayton, Ohio is made up of renters. The other 43.3 or 43.4% is homeowners.
Interesting, because when you get in this kind of a home, and I'm looking at the front of it right now, I guess you could call it a starter home or whatever you want, but it's a kind of home that a young family would want to be living in, and it's oftentimes these young families is the jobs today that we get don't have that stability and security, and when it's a good company, they do move you around a little bit. You know what I mean? So you're hitting the nail on the head, and we're seeing a lot more of that. And you picked a really great area. In fact, Ohio is, I think, probably one of the top areas in the country. Dayton, in particular, Dayton and Toledo, I think I like probably as much as anything. Those two areas right there. But good for you. This was a good one. All right, and I'm looking at the kitchen here. Really nice. Nicely, updated. The white cabinets, the black appliances, and very clean looking. Very, very nice looking. No one's going to be ashamed to live in a place like this. And
those appliances are virtually brand new.
Yeah. And the bathroom is very clean, and for that kind of a home, it looks like everything. I'm looking at that bathroom, and then here I got the living room, I believe, with the steps going upstairs and the window. You're going to have plenty of light in there in that particular area, so that looks good. And upstairs we have a room. It reminds me of when I was a kid. It's the kind of room I lived in when I was a kid. By the way,
that's a teenager's dream right there. That room.
Oh, no doubt about it. Absolutely. Yep. It sure is. It's obviously everything is very, very rent ready. Very well. It's like you said. It's already tenanted, but it's rocking and rolling. So that's nice. Now you got another deal going too. Tell us a little bit about that. I'm looking at that one right now. This is brick. He huffed and he puffed, but he couldn't blow that one down. I'm joking with you there, but
Yeah. This one is in Cincinnati, Ohio, and it's also 3-bedroom, 1 bath, fully rehabbed. It has a tenant in it already. They signed the agreement in December. It runs through next December of 2019. Total investment was just under $75,000 for me, and it rents for $900. Again, Cincinnati is a very strong market right now for real estate investors. There's good appreciation in the properties. Another interesting fact about Cincinnati, it employs more than 60,000 people in marketing, brand management, design, research, advertising, data analytics professionals. So it's increasingly becoming a more attractive region for diverse millennial talent. And again, I go back to that millennial talent. They tend to want to rent rather than own because they like that flexibility to be able to move around.
Right. And I think, what you just said here twice, actually, and people tend to not understand the importance of, is that the real money in owning property is in the appreciation. If you can get a positive cash flow on the rent, that's great, but it's especially great if your property is appreciating, and you're buying the kinds of properties here that give you that opportunity, it looks like to me anyway.
Yeah, and there's lots of Fortune 500 companies here. I mean, you've got Kroger, you've got Procter & Gamble, you've got Macy's, you've got the Ashland Group, Fifth Third Bancorp, just a lot of really strong, good corporate companies that bring a lot of people in with jobs.
Well, you've done a lot of homework, and more than most of the students that I've worked with do. And you picked two cities in Ohio that aren't really that far away from each other.
No, they're about 30 minutes.
Yeah. What do you look at for the future? Where are you going with this? I mean, you got two that are making money for you right now, and not going to hurt you for the future. What's your thinking as far as especially now that the stock market's showing so much volatility and everything, and a lot of wise investors are saying to get out of those cash type things and get into something a little more real, I guess would be the word for it.
Well, so my thought is to continue to look around this area, but also look in other markets. Part of what was talked about in the deal lab is that St. Louis is a strong market to look at right now. So I'm probably going to start researching St. Louis a little more. Kansas City was another area that was brought up. So I've already looked at some properties in Kansas City that I'm interested in. And then you've got Indianapolis. Indianapolis is really high cash flowing areas because the property values are relatively low, but they are forecasted to be on the rise. So you're going to pick up some appreciation there in the properties, and at the same time you're going to be having high cap rates because the rental rate demand right now is very high. So those are kind of the areas I'm looking at. Midwest mostly. I might consider certain other areas, but right now that's kind of where I've got my focus. I don't want to get spread too thin looking at too many different markets.
Well, I don't blame you for that. And you did mention some markets that, there's already been a lot of research done on the markets that you indicated as being prospective, pretty good markets. Well, that's awesome. I'm showing right now the kitchen on this property, the second property, and it looks like a pantry here. And we've got a fireplace in the living room. That's nice. That's the kind of thing.
New carpet, new paint. Again, fully rehabbed.
Mm-hmm. Well lit, also appears to be anyway. Pretty well lit here. You got a pass through on the kitchen. That's not quite an open kitchen, but it's the next thing to it. And it's, you can make that work. You could entertain and use your living room, your kitchen, and I guess it's a small dining room off the kitchen there. Am I correct in that? Is that what that is there?
Yes. And what I like about this house is it's very functional. It serves various needs. You've got the dining room. It's located right next to the kitchen. No wasted space, really. And that's what I like in a house like this because, at 1,071 square feet, you can't have too much wasted space if you want to be able to have a family that can live in there. And so that's another reason why I like the property being 3 bedrooms. That's going to me be more marketable because whether it's a family or whether it's a group that's 2 or 3 different people that want to rent it, I can find more demand that way than if I had just a 1-bedroom or a 2-bedroom.
Right, and this has all that criteria. It looks like it's is that to the backyard? That door through the kitchen, does that go to the backyard? Is that where that goes, or?
Yes.
Yeah. And so that's nice. It's everything that even in the upscale things that people want, but it's at a lower level, but it's still, as you said, very functional, very, very practical, very cool there. Well, give me a summation of the direction that you're planning to go in the future here, Mark, if you wouldn't mind, and then we'll sum this up.
Well, kind of my direction is looking at, again, properties that are in strong markets where the population's growing, and, that will help me to determine that there is rising demand in the properties, that those values are going to appreciate, and then also that, I have strong property management. I think that's so critical, too. You want to have really good property management.
Well, Mark, thank you. Appreciate your being with us here today. and all the comments that you've made. Very, very helpful, very strong. I want to reiterate one of the things that you tried to get across here for the benefit of our listeners is that the key is to keep your properties occupied with good tenants. And that means that you're going to, while you do good market research, it's not just the market that you're researching your property managers, because they are the ones that can help you make it happen. Well, thank you. Appreciate you.